Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. So in this video I'm going to start the next accounting standard, that is AS4, contingencies and events occurring after the balance sheet date. In this unit number 2, already 3 accounting standards I have already completed in the previous videos. AS1, that is disclosure of accounting policies. Then AS2, valuation of inventories. AS3, cash flow statement. All these 3 I have already completed. If you have not watched, go to the playlist of my channel, select the subject accounting standards, select unit number 2, you will find the 3 AS 1, 2, 3. Now in this video I'm going to explain you about AS4, contingencies and events occurring after the balance sheet date. So before start the explanation, take the screenshot of the points which I have written on the board, then I'll explain all the points in detail. Now, contingencies and events occurring after the balance sheet date. So what is the purpose of this accounting standard? The purpose is this standard deals with the treatment in the financial statement regarding contingencies and secondly events occurring after the balance sheet date. Now, but this standard does not deal with. So specifically the accounting standard has given that this AS4 will not apply in 3 situations. What are the 3 situations? First one, liability of life insurance companies and other insurance companies arising from policies issued. Life insurance company and general insurance company, they will issue the policies. So any liability arising on these policies which are occurring after the balance sheet date, that will not be taken in AS4. AS4 is not applicable to insurance companies on policies issued. Secondly, obligations under retirement benefit plans. In an organization, the company will give retirement benefits to the employees. So any liability on retirement benefit plans, that also AS4 is not applicable. Thirdly, commitments arising from long-term lease contracts. In case of leasing business, so any liability arising on long-term lease contract, on that also AS4 will not apply. Simply remember 3 cases in which AS4 is not applicable. First one, insurance companies. Secondly, retirement benefit plans of the staff. And third one, commitment or liability on long-term lease contracts. Note it down. Always keep a notebook, pen, calculator, everything ready before watching this video. Whenever I explain something important, always keep a note of it. Then only you can be able to remember. Now, however, pursuant to AS29, later on, one last accounting standard issued was AS29. The AS29, the title is Provisions, Contingent Liabilities and Contingent Assets. This is the title of AS29. So in this AS29, contingencies are included. So already contingencies was there in AS4, but later on when AS29 was issued, again contingency appeared. So what the ICAI has done? ICAI has removed contingency from AS4. Now contingencies are dealt in AS29. So now our focus in AS4 will be only on events occurring after the balance sheet date. Contingencies are excluded. So coming into effect, all provisions of AS4 that deal with contingencies stand withdrawn. So all the provisions regarding contingencies which were given in AS4 was withdrawn. Now contingencies are included, covered in AS29. Now hence only events occurring after the balance sheet date is being considered. So we will cover up only events occurring after the balance sheet date. Now, events occurring after the balance sheet date. First of all, you must know what are the events that are occurring after the balance sheet date. So the events are those significant events. Are those significant events both favorable and unfavorable that occurred between the balance sheet date and the date on which the financial statement are approved by the board of directors. See, every year the accounts are closed on the last day. For example, in India, financial year ends on 31st March. On 31st March, all the accounts are finalized, closed. Final accounts are prepared, income statement, profit and loss statement, balance sheet is prepared on 31st March. But the board of directors have approved the financial statements on 30th June. That means after 31st March, April, May, June, after 3 months, the financial statements are approved by board of directors. So these 3 months, that means from 1st April to 30th June. Actually, accounts are closed on 31st March. So after 31st March, 1st April. From 1st April to 30th June, because on 30th June, the financial statements are approved by the board of directors. So during this 3-month period, any significant event occurring, whether favorable or unfavorable, these are called events occurring after the balance sheet date. Right? The accounts will be approved by board of directors in case of a joint stock company. But in case of any other entity, the approving authority will be there. The approving authority will approve after the balance sheet date. So there can be some events that can happen after the board has been approved the financial statement, but before the AGM of the shareholders. Events falling in this period are not covered by accounting standard 4. What will happen? First of all, accounts will be closed on the last day of the financial year, 31st March. Accounts were approved, adopted by the board of directors on 30th June. But the AGM, annual general meeting of the shareholders, the annual general meeting of the shareholders was held on 31st July. So actually the board of directors have approved on 30th June, but AGM was conducted on 1st July, 31st July. 31st July. So there is a time gap of 1 month. From 30th June to 31st July. This 1 month period, any event occurring is not covered by AS4. Because the event is occurring after the approval of board of directors. But the events which we require is after the balance sheet date and before the approval. So any event occurring after the approval of the board of directors will not be covered by AS4. So you understood the events occurring, significant events occurring after the balance sheet date, before the date of approval by the board of directors, and those events may be favorable or unfavorable, any event, those events are covered by AS4. Now, types of events. This accounting standard 4 has classified the events into 2 categories: adjusting events and non-adjusting events. These are the points you have to remember, and in examination you have to write all these points, whatever I am explaining. Adjusting events. What are these adjusting events? Those which provide further evidence. Concentrate now. These wordings are very important. Those which provide further evidence of conditions that existed at the balance sheet date. That means the events are those events which provide further evidence. That provide further evidence of the conditions that existed on the balance sheet date. That means conditions was there, but these conditions have given more evidence after the balance sheet. These are called adjusting event. By taking one example, I'll try to explain you more. For example, this account receivable debtors. As on 31st March, the total debtors are 1 lakh. Out of 1 lakh, one customer is there from whom 10,000 rupees are due. And after the balance sheet date, that customer has become insolvent or bankrupt. So this information that the customer has become insolvent, we got the information after the balance sheet date, but before the approval of the financial statements by board of directors. This is a significant event, and this event should be adjusted because this event happened after the balance sheet date of those conditions which were existing on the date of balance sheet. On the date of balance sheet, 10,000 rupees are due from the customer. After the date of the balance sheet, we come to know that the customer has become insolvent. It is an adjusting event. Adjusting events. Now balance sheet date. For example also I have given here, a loss on trade receivable. Trade receivable means credit customer, debtor. A loss on trade receivable is confirmed by the customer declaring insolvency after the balance sheet date, whatever just now I told you. In such an event, provide information that materially affect the determination of amount relating. If we do not consider this event, then what will happen? The profit shown by profit and loss statement will not be true, because one significant event happened after the balance sheet date, and this event will affect the profit. If this event is not adjusted, profit will not be true. So it is necessary to adjust the financial statements to take into account that loss, that bad debt loss. Now, amounts relating to conditions existing on the balance sheet date. AS 14 requires that values as on the balance sheet date to be readjusted. Now, in this situation, the accounting standard 4 requires that the values in the financial statements should be adjusted for that event which occurred after the balance sheet date but before the approval by the board of directors. Now, non-adjusting events. What are these non-adjusting events? Those events, the conditions does not exist at the time of balance sheet. At the time of preparing the balance sheet, no conditions were there. Completely unrelated. The event is not at all related with the conditions existing on the balance sheet date. Entirely new event. Completely new event occurred after the balance sheet date. This is called non-adjusting event. The conditions does not exist on the balance sheet date. So those events which are indicative of conditions that arose subsequent to the balance sheet date. Example, simple example. Value of investment held as on balance sheet date could have significantly fallen on account of crash in the stock market between the balance sheet date and the date of approval of financial statement by the board. Example, a company has 10 lakh rupees value of investments shown in the balance sheet on 31st March. When the accounts are closed, balance sheet shows investments 10 lakh rupees. Now, after the date of the balance sheet, there was a crash in the stock exchange market. In the capital market, in stock exchanges, there is a crash. Due to this crash, the investments have decreased. The value of the investment have decreased. And this decrease in the value of investment due to crash is an unexpected thing happened. Completely unexpected thing. So this is called non-adjusting event. In this case, the balance sheet value of investment should not be adjusted. Already 10 lakh rupees we have taken in the balance sheet. Same 10 lakh rupees should be there. It should not be adjusted. Because the event was completely unexpected event. Crash in the stock exchange. No accounting treatment is required for such events. Now, however, non-adjusting events might be such significance that may require a disclosure in the director's report to the shareholders. Such report should disclose the nature of the event and the estimate of their financial impact. The event was significant. That means there was a crash in the stock market due to which the value of investment have fallen down. This fact, this statement should be given in the director's report to the shareholders. So at the time of annual general meeting, the director's report should be given to the shareholders. In that director's report, the director should specify that this thing happened after the balance sheet date. So this is a non-adjusting event due to which the company suffered a loss of 2 lakh rupees. If the estimated amount can be ascertained, then the directors should write the estimate. That on account of crash in the stock exchanges, 2 lakh rupees will be the expected loss to the company. This information should be given to the shareholders by the directors in directors report, but no adjustment is required in the financial statements. Now if such an estimate cannot be made, then the directors report should contain a statement that such an estimate cannot be made. The directors has to see that whether estimated loss can be found or not. If no estimate can be made, the directors should report the same, that we cannot be able to make the accurate estimate of the loss which we are going to incur. Whether estimation is there or estimation is not there, that fact should be given to the shareholders. That's all. These are called non-adjusting events. Now exceptions. There are some exceptions to this rule. What is that rule? That adjusting items should be adjusted and non-adjusting items should not be adjusted. Only in the director's report information should be given. That is the rule. But two exceptions are there where the events are non-adjusting, but we have to adjust it. So only under two exceptions the adjustment should be made even if the event is non-adjusting. So what are those cases? The following events, although coming under non-adjusting events type, needs to be adjusted. First one, statutory requirement or event of special nature. Statutory requirement or event of special nature. What is this? Suppose the company has declared a dividend after the balance sheet date. After the balance sheet date. So when the company declared the dividend after the balance sheet date, so it should not be adjusted. The financial statement should not be adjusted, because this event is happening for that condition which does not exist on the balance sheet date. So it's a non-adjusting event. But the law says, statutory law says that when any dividend is declared, it should be adjusted. Now even if the event is non-adjusting, we have to adjust because statutorily required. Secondly, fundamental accounting assumption of going concern is no longer applicable. If the accountant see that the fundamental accounting assumption of going concern is not applicable. Example, the business is not going to continue for a long period of time. Very shortly, the business is going to be closed. In that case, even if the event is non-adjusting, we have to adjust it because going concern fundamental accounting assumption is not applicable. So in these two cases, non-adjusting event should be adjusted. Only in two cases. Now, special points to be considered. For this AS4, some points we have to consider, we have to remember. First point, cash embezzlement by an employee before the date of balance sheet. Detected after the date of balance sheet is an adjusting event. An employee of a company embezzled cash. He has stolen cash. When he has stolen the cash before the balance sheet date, he has stolen the cash. But after the balance sheet date, it was detected. Detection was made after balance sheet, but the event occurred before the balance sheet. Right? Now in this case, the loss on this cash embezzlement should be adjusted because the event was there before the balance sheet. Before the balance sheet, the event occurred that the employee has stolen the cash, but it was detected after the balance sheet. So this item is an adjusting item. So financial statements should be adjusted. Next, If a provision has been made for bad debts at the balance sheet date and it is later known that debtor has become bankrupt, it should be considered as an adjusting event. 31st March, when we close the accounts, we have already provided provision for bad debts. We have already made provision for bad debts. And after the balance sheet date, one of the customer have become bankrupt. The event, the customer become bankrupt after the balance sheet date. But on balance sheet, on the date of balance sheet, we have already made the provision for bad debts. Now this event, that customer has become insolvent, is a significant event. So it is an adjusting event. So this loss of bad debts should be adjusted in the financial statements. Adjusting event. Third, if an organization suffers a huge loss on account of fire or earthquake or any other situation which did not exist on the date of balance sheet, then it is a non-adjusting event. Hence, the financial statements need not reflect the same. See, if earthquake or fire or any such natural calamity occurs after the balance sheet date, that event is a non-adjusting event because the conditions does not exist on the date of balance sheet. All of a sudden natural calamity occurs. So this is a non-adjusting event. No adjustment should be made in the financial statements, but the director's responsibility is to give this report in the board of directors report and submit it, give it to the shareholders, that this is the event happened after the balance sheet date, and on account of this the company may suffer a loss of so and so amount. That information should be given to the shareholders. It's a non-adjusting event. However, such loss being large needs to be disclosed in the director's report. Next one, dividend declared by the board after the balance sheet date should not be shown as a liability unless required by statute. If the board of directors declared the dividend after the balance sheet date, so naturally it is a non-adjusting event, but the statute has made it compulsory that the proposed dividend declared should be adjusted in the financial statements. Next one is fifth, a suit filed against the enterprise before or after the date of the balance sheet but pending before the court should be treated as a contingent liability and must be disclosed in the financial statement along with estimate of the possible financial impact. Suppose one of the party has put a legal claim, legal suit against the business before or after the balance sheet. This is called contingent liability because ultimately it depends on the court of law to give the verdict whether there is a liability or not on the part of the company. It is called a contingent liability, and contingent liability should be shown as an information. The amount of loss is not certain. We may incur loss or we may not incur loss. So only information is required in the form of contingent liability. Last one, if an enterprise is negotiating on a deal before the balance sheet date and is able to close the deal after the balance sheet date, it should not be adjusted as negotiation does not mean anything. Last point regarding negotiation. If the business is negotiating something with another party, but the negotiation is not complete, the negotiation is not yet completed, so no adjustment is required for this negotiation because negotiation is nothing. It is not any transaction. It is simply a deliberation. So this negotiation should not be adjusted, should not be reported. That's it. So this is the end of AS4, that is contingencies and events occurring after the balance sheet date. So inshallah we'll take up the next accounting standard in the next video.